Howdy, Jacob here. Today we're looking at RCM Technologies in the professional services industry. Looks like they provide business and tech solutions in the US, Canada, Puerto Rico, and Serbia. It operates through three segments: engineering, specialty healthcare, and life science and information technology. Founded in 1971. Current P of 10 looks intriguing. Revenue growth from 194 million in 2014 to 263 million in 2023. Doesn't look super sexy, but I think that even low growth, no growth businesses are worth something. So earnings per share have gone up like crazy, actually. Operating margin and gross margin are both increased as well. Very impressive the last 3 years. 30% plus return on invested capital. But you got to keep in mind, the more a company buys back shares, the more inflated that number looks and is not necessarily entirely emblem of I just made up a word there, is not entirely encompassing the actuality of what return they can get by reinvesting back in the business. So 6 million cash on hand, 31 million long-term debt. That 31 million in long-term debt in relation to earnings is, what is this, on a 5-year average basis, maybe 10 or so. So that's 3 times their 5-year average free cash flow. Not terribly concerning, but they have just used everything they have to repurchase shares. If they're buying these shares back at a good valuation, then that could just be an absolute fantastic reinvestment back in the business. We see that since 2019, they've gone from 13 million shares outstanding down to 8 million. So you own so much more of the business by just doing nothing, and it does look like they have increased revenue, increased income, and increased cash flow, which is great for you as the investor. And so let's make some assumptions here. So revenue growth, I don't think we're going to be seeing much, if anything, here. I think that post-COVID there were some huge growths, and then we're seeing it actually go down a bit. I think that over a 7-year period, maybe we'll look at 2% a year. Their ability to reinvest is great, but they don't necessarily reinvest back into the business. We've seen they just buy back a lot of shares, which again can be a fantastic use of cash, but doesn't necessarily warrant them a premium per se. So maybe I'll do 14 on the P price free cash flow side. Margins, they've been fairly high recently. Can they keep that up? I wonder. Let's do a range here, 3 to 5. And then on the share change side, let's say that they buy back, what is their current valuation? 169. So that's 1.7, 3.4, 7.4. They could easily buy back 5% of shares. That would be 1.7. What is that? 9.5. That'd be a good amount, but they could probably repurchase 9.5 million since that's all they're doing with their free cash flow. It looks like maybe 5 to 10%, if that, is going towards acquisitions. So I think they can repurchase that amount of shares reasonably without going into too much debt. Um, but yeah, I just don't see the growth necessarily in the margin. The margins, I don't know if they can keep at these elevated 10%, 9% range. I think it's going to go down probably a little closer to what it was historically, and so that's probably the reason that I have the stock needing to fall 50%. But still an interesting buy. I think when companies buy back this many shares, uh, it's kind of twofold. Like sometimes it's when they think that their valuation is absolutely cheap and it's going to be like that forever. But sometimes you have to think like maybe it's because they're just producing a lot of cash and they have nothing else to do with it, so they just buy back shares. And sometimes that's definitely not the best use of their cash. Buying back shares that with like a 5 to 10% return on the stock is not that great of an investment. So just keep in mind that it is using your cash invested into this company, part of it, to repurchase these shares. And if that's the most advantageous thing, then absolutely it's smart. But you have to keep in mind that they are using their money. They could be reinvesting at rates, maybe possibly higher. So, um, yeah, just keep that in mind. But for right now, it just needs to fall a little bit before I do more research on it. Hopefully, you enjoy the video and have a great rest of your day. Thanks.